think Netflix is reacting to the changing marketplace for media and particularly for streaming. More and more, it seems that companies need scale. And while we think of Netflix as one of the biggest in the industry, you look at a Paramount, you look at Warner Brothers Discovery right now, and they just don't have the scale to compete. So I think that Netflix is looking in the future to think what it's going to take to maintain their position. Warner Brothers has really been struggling with a mix of assets, some of them performing, obviously HBO Max being so powerful and the key to the library and the assets. Warner Brothers with Harry Potter and other very valuable assets. Batman is in there as well. So there is value there, but they definitely have had trouble uncovering that value to shareholders partly because of the difficulties of streaming these days. So Netflix is paying 82.7 billion and they're taking on 72 billion in debt. It's a huge transaction for them. It's a huge transaction in the market. Is it a fair price? All of the bids were not far apart. And we've talked about Warner Brothers has such incredible assets. It probably is a fair price for anyone that can bring out the value in those assets. We look at how Netflix stock is reacting. They're going to take on 72 billion in debt, which is huge. It's really not about is there a fair price there. Everyone was bidding within a similar range, and again, it's really hard to say what's the fair price for those assets with a company that can really bring out their value, which Warner Brothers were struggling to do. Clearly, investors have really pulled back Netflix stock in anticipation of this. The stock is now down about over 15% in the last month or so, but it's still up over 15% for the year. So you still have a very valuable company that's getting a lot of investor interest, but certainly some pullback, waiting to see can they do a big merger. Netflix has never done a major merger. They've had incredible growth all organically, internally. The focus has always been on subscribers and streaming. And now the focus is going to become on different ways to look at their profitability. And certainly if they're able to execute and manage such a large acquisition. Some investors are saying the reaction of Netflix is very negative. The stock's down double digit going into this is proof that this may not be a good transaction. Certainly, we've never seen Netflix do any big transaction, and there's questions about their ability to execute. But investors really need to keep in mind how volatile this stock can be. In 2022, Netflix was down almost 60%. So it's had a tremendous run since then, but to think of it as such a stable outperforming of a stock, anyone owning Netflix has always been buying into a company that has had a volatile history as a stock. I think an acquisition of this size is really good to see in the market this year. We've certainly seen plenty of activity, but we've also talked a lot about what hasn't happened under the uncertainty this year throughout both financial markets as well as geopolitical markets. So it's exciting to see a deal of this size coming to fruition. I think it will give confidence to a lot of other companies to be thinking about strategic acquisitions going into 2026. They'll certainly be watching how the market reacts to this. Clearly, the Warner Brothers stock has done tremendously well. Again, we said that Netflix stock has pulled back a lot in the interim, but still you're looking at a stock that has had a tremendous run this year. They haven't given all of that back. So I do think those who are thinking about large strategic acquisitions are going to look at the market reaction to this and take it as a positive sign that the markets are amenable to more transactions like this.